Okay, so now I just started the recording. I'm going to record this session to post on Blackboard for those who may have, actually, no, I'll post it on YouTube. For those who might have missed, since we only have 26 participants out of 200, I'll post this lecture there. It's not really a lecture. So the recap for those who missed what I said before I started recording is you can click on class videos here. That'll open up the playlist for our class where you can see all the chapter videos. So these are normally what I'd be lecturing in class, I'm posting on YouTube. So those are all the chapter videos that you can watch. The only videos where I'll be using a Zoom conference will be for the Zoom simulation reviews. Everything about the class is the same, so you keep up with the homeworks on My Finance Lab, and test 2 has been, the first midterm has been completed. People did very well, so you have the final to look forward to, and the final, let's see, finals coming up in May. And just open this up a bit. I'm not sure when the final is, but it's on one of the announcements here. Trying to, let me just, where is the, there should be a link here somewhere. I don't know. Oh, here it is. So the final is on May 13th at, just see, check the chat. So this week's lecture should be chapter 6. Yes. So Joseph asked, is this week's lecture should be chapter 6? That's correct. So if you go to the first thing first, the exam, the final exam's on May 13th, as always, that hasn't changed. And it's at, you have the whole day to work on it just like this. So the final works just like the midterm. Well, hopefully the servers will be better then. And if you click on class videos, this week you should be watching chapter 6. So chapter 6, I have a video lecture in addition to an Excel lecture. So there's 2 lectures posted. And then I have chapter 7, I have to link to the class. And then chapter 8 I've already posted. So you can just, I'm hoping to have all the lectures posted before the end of the class. So you just go there to watch those. Complete the homeworks on My Finance Lab as usual. And next weekend is also, we're going to have a Zoom simulation due. Everyone completed it on the 5th, which was Sunday, and we have a next one due next weekend. And before I move into the Zoom simulation review, does anybody have any questions about the course or the due dates or anything like that? And everything has been set up already, so you can see all the due dates on My Finance Lab. The final is on the same day, and all the due dates, as you can see, were pushed a week because of the extra week of spring recess. And if you look on your control strip, there should be something that says chat, or it might say more, and you can select chat. So, okay. Chapter 10 is still going to be covered due to the, chapter 10 is going to be covered because I always built in 2 extra weeks in the course in case of a snow emergency, in case of anything that could happen. I have an extra week built in that if I don't need to use the extra week, I have enough weeks to cover all the chapters. And if I have the extra week to use, I do a special event or a special topic, which is this year I'm cutting out the special topic so we can get to all 10 of our chapters. Okay, thanks Joseph for those questions. Okay, so I'm gonna move into the Zoom simulation review. And remember, we still have TAs for the class. Now you'll see this button here called Zoom Meeting. You can do Zoom meetings with the TAs. You just have to schedule, email them and schedule some availability with them if you need to work with them. And of course, email. So we still have all our TAs for the class, which are listed somewhere in the announcements, as well as me. So, but by and large, you've been through the class for 7 weeks, so you know how it works. They cover 1 chapter, usually a week or 2 weeks, and then you do homework on it, and then you take an exam. So pretty simple stuff. moving into the Zoom simulation, we've just completed year 4. So this is year 4, and we can see as the net profits have increased here on year 4. And as I'm talking, feel free to go ahead and you can put some questions in the chat group, and I'll get to them when I can get to them. So we have the points for the last round are pretty much on par. Some teams hitting that 500, most teams getting over 300. So points are pretty steady. We see the stock prices have gone up. We have a new stock. Actually, this is the same stock price leader. And $115, which is great for the stock price. And we have a new leader in sales, red at 682 million. And we have a new earnings. Well, we have the same earnings per share, tech part 2. All right. And if we look at the leaderboard, we see that team 2, which is my example team, which I did a full video and showed you everything I did for team 2 last round. They got the highest points, but most teams are over those 300 points you need. The real thing to look at, let's just go right down to, this is a little bigger. Oop, that's too big. Okay, just go right down to total points. So we're on 4 rounds. And a lot of teams are over 2,000. So most teams here are over 2,000 points after 4 rounds. So the next 2 rounds, you just have to make those, I think, 400 or 500 points to get to the full score. So if you're at least 1,700 points, you still have a good shot of getting the full score for this game. And for the 5 or 6 teams below 1,700 points, you still have a good chance to get a significant amount of points for the simulation. And as far as gross profit margin, we have one team at 69%. So we have a number of teams at 60% or higher, which is incredible for year 4. And we want to get that up to, hopefully, some teams get up to 80% by year 6. So remember, you started at 40%. So there's still 2 teams below 40%, which is bad. Investors do not like that. So by the 4th round, you should at least be in the 50 percentile of profit margins, gross profit margins, or at least the 60 percentile. Okay. So I'm going to go into, this is team 2, my example team that I use to show you what I would do for each round, to kind of walk you through each round. And so what we have here is I was able to greatly increase my sales from 300 to 600 million, and my profits from 91 to 144 million. And so this is my sales to profits. So my stock price has gone up, earnings per share have gone up, and points, having been a low of 200, have gone up to the high of 600. And you can see this blue chart is really important, because in this blue chart, you see the blue bars are the market potential, and the yellow is my sales. So I've missed about 400 sales on economy. I only built 4,000 cars, but I had enough demand for 4,400, 5,700 on sedan. I only built 5,400 cars. Truck, I came pretty close. I was only off by 100 cars. And for luxury, I was only off by 71 cars. Okay. So now I'm going to pop into team 2. Okay. So I'm going to show you, if you're in, just how you can review round 4. So, okay, we're up to 29 participants out of 200. And so far, 50% of the people have answered the poll, have said that they don't like the Zoom conference tool and they rather just have posted videos. 22% of the students feel that most of their professors seem confused with the new technology, and 17 are just not impressed. All right. Okay, so here is my example team. So in the overview, I can see that I got the 600 points here. So some key inputs here: sales increased by 61%. I did better on the debt ratios. Profit margins went from 53 to 57, an 8% increase. But operational and net profit margins went down due to aggressive advertising. So that's something I need to improve upon. Total asset turnover went up because I utilized a lot of unused inventory. Earnings per share increased by 60%. And book value here, my forecasts were a lot higher, coming off some terrible forecasts. And I had an increase in my operational investments as well as a surplus, which led to the 600 points. So what I'm going to do moving forward is I can review my assessment, look over my charts, and for the class as well as for mine individually, check over the industry, which gives me all the factors of all the other teams, and then restart from the beginning. So now I've pumped up my operational cost reductions from $3,600 to $6,600. So it's going to make it easier this round to increase my scores. So I'm going to increase my characteristics. And now I'm able to increase my sales price and my profit margins. And then I'm going to increase my forecasts. But first, what I'm going to do is I'm going to go down to get an idea. Always, forecasting is difficult. I like to use the student manual to see what the demand will be. If everything was equal, this is what the demand should be for this year. So if I feel my cars are better, I may want to forecast higher than the average. If I feel my cars aren't as good, I might forecast below the average. But that's sort of my point of reference. Yeah, so Joseph wrote, that's a big jump in profit. Yeah, I was able to jump profits pretty high because this team was previously just computer run, and I took over and focused a little bit more on the profit margins. So that helped to kind of guide the profits higher. And the way I did that was by increasing my operational cost reductions. And that's one of the fastest ways. So I'm popping up from 55 to 65% because of these operational cost reductions. So I'm going to stay this at 5,000 for that. Okay. And I always want to increase my my key statistics on everything, hoping to get more demand for my car. So I'm going to put this at 7,000 and kind of make this, so you want to make this higher because a lot of importance on that. So hopefully maybe I could lower my price a little bit. Okay, so as long as I'm going up by 4 to 5 percentage points, I'm happy on my profits here. So I'm going to need them to have to pay for all the factories I'm going to be making. And again, I pumped this up, my operational cost reductions. If I don't get those operational cost reductions up, I'm not going to be able to sell enough at a good increase in profit margins. Here, my profit margins really didn't go up too much. So I'm going to just maneuver this around a little bit to make sure I get those profit margins higher. And by and large, don't follow what I'm doing 100%. I'm just kind of pumping some numbers in here. So I wouldn't follow my example 100%. It's not the best example to go by, but the one example you should follow is that I was able to increase my operational cost reductions. which is making, let's see, which is making it easier for me to have that increase in profit margin. I'm here in this round, I'm trying to go for about, I want to get at least 5 percentage points higher on everything. So yeah, that's about 5%. Okay, so I've set up all of my new cars rather quickly, but the key thing is I don't finish until I at least have this increase, this gross profit margin, because that's critical for everything to increase. Okay, moving into marketing. Marketing takes a longer time, but I am going to follow the guidelines here and of the expected range and update my marketing based on the new expected range. But that's going to take a while to set that up. So I'm just going to move into production and I'll buy my new production plant. I'll make my new cars. And then I'm going to greatly increase my operational cost reductions again, because this is what is going to get me points next round, because anytime you increase your operational cost reduction, you get points. And also, I'm going to buy a new factory here. Also makes the cost reductions higher in the next round, so I'll be able to have even higher profit margins moving forward. But this is going to cost a lot of money because I'm buying a lot of production plants and I'm increasing spending a lot of money is operational cost reductions. Okay. So moving into the last position here. Is the finance page. Let's see. Let's go to the very bottom. Okay, I have a nice surplus. Most of that's because I didn't spend my marketing yet. All right. Okay, so let's just see here. If I have enough money, I'm going to retire some of my debt. I don't have that much left. And then buy back some stock. Okay. So that's basically how I would run through year 5 in a very quick outlook. So let's see, if you have any questions, you can put them in feel free to put them into the chat box here. I see that Danny has a question. What happens when you max out the operational investments and you have, like I have done, what do you do in year 6? Take the loss in points of some categories. Okay, so for my year 5, I think what you're saying is what happens after I max these out. So I'll get points. This is I'll get points for that, but in year 6, I won't be able to increase my operational cost reduction. So I just won't earn any points in year 6. So once I am purposely maxing them out early. So year 6, when I do next year, I'll have the highest amount of operational cost reduction, something like 12,000 per car, and I'll greatly be able to increase my profit margins. So I don't mind giving up points on operational investments. It'll just be 0. I won't earn any points there, but I don't mind giving up those points if that means I'll be able to have higher profit margins earlier, which those profit margins cascade into about 14 different other categories. So that's where I really want to have most of my profits. Did I answer your question, Danny? Okay, yes. All right. So questions about the simulation moving forward. I also put a test poll up if you want to answer that. Well, actually 20 of 31 people already answered the test poll that I put up, and I'll release the results at the end of the class. It's just really a test. It doesn't really mean anything. I was just testing that. Okay, so please type in the text box if you have any questions, the chat box, which you can find on it's usually on the strip where it says video or mute participants, and at the end it might say a button called more, and you can click on that, or it could just be an orange box flashing that says chat. So if you have any questions about, and these questions can be about the simulation, but also take questions about the class if you have those as well. I had a glass of water here. Where'd that go? Okay. Oh, here we go. So Paul has a question. Do you think if we have to purchase a new factory for only 200 cars, would it be better to reduce the sales forecast to better asset turnover? Yeah, I do agree. So what the question basically is, say I'll go into my sedan. If on my sales forecast, I wanted to forecast 5,200 economy class cars, then that would mean over production, I'd have to buy a plant just to make those 200 cars, which thereby I'd be spending another 10 million to buy that additional plant. So what I would do, rather than try to build the extra 200 cars and buy the extra plant, I would just rather sacrifice those 200 sales and maybe reduce my advertising a little bit to make up for the fact that I don't have to really push so heavily to have the maximum sales. Because I think the way I look at it is if I would want to be able to build at least 500 cars in the new production plant to make it worthwhile, because it's a lot of money to spend and it's going to drag down on a lot of return on assets, total asset turnover. So I would try to, what you could do on the other side is if you wanted, you could increase your forecast by another 300 cars and just spend some more money in advertising to try to make up the difference, to make the plant that useful. So good question. All right, so let me go back and fix that. So the thing too, also the marketing is dynamic. So as the rounds go by, you see more and more money is being spent in the marketing area, and that is definitely having an effect on people's profits. So I might as well just, but marketing I think is the trickiest part of this sim, because if you over market, then you wind up wasting money on marketing for cars you develop the demand and then you just don't wind up selling anything. So again, I'm just popping numbers in here to get my marketing done. All right, so we have a new, Joel just joined the class. Daniel just joined the class. Okay, so Joseph has a question. Oh, there we go. I accidentally muted my mic. So Joseph's question, my team has 2,053 points. So if we keep going, what are we doing by making our profits go up? Do you think we would be able to get, yes, you could, if you have 2,000 points already, you should easily get to 2,500 points. But to get to that 2,500 points, I would make sure your profit margins go up at least 3 to 5 percentage points for each round for the next 2 rounds. So if you keep doing what you've been doing to make your profits go up, you should easily get to that. You only have to get 250 points per round for the next 2 rounds. So that would be easy. That'd be an easy thing to do. So here I am at home waiting for your questions. It's 4:30. We have 32 participants. So if you have any questions about the class or about the simulations, post them here. So I just went live on the video feed, so you know I'm not a computer bot. And the results for the midterm were very good. Most people did, I think the average was pretty high. Most people did well. Make sure that you put your assignment due dates in some sort of calendar or some way to remind yourself, because I'm still moving forward. I'm not going to be accepting any late assignments, so make sure that you keep track of that pretty well. And we only have 2 rounds left of the simulation, so the class is actually closer to the end than the beginning at this point. All right. Okay. Well, let's see. Got a couple of questions here. Allison, are we able to see what questions we went wrong for the midterm? Yes, you'll be able to see the questions on the midterm after everyone completes it. On a day or so, I'm going to release the questions for you to review. You just go into results, and then you should be able to click review exam. But it's going to be a couple days before I release it. And then Jingbo writes, if you wouldn't mind, could you go over V's team performance chart? Okay, so let me find that. Okay, charts, team performance chart. Okay, so for this team, a nice uptick in sales each year and in profits, and sales and profits are on the right track. So everything in stock price is doing very well, earnings per share. Points. So year 2 was as a low on your points, but 3 and 4 are doing very well. Okay, so here's your problem. And I'll answer your questions about this in a second. Your demand is really good. So your demand is really good, but you under forecast and underbuilt your cars. So here you should have made 3,500 cars. You only made 2,800. 4,500, you only scheduled 39. Here you could have sold 6,200 cars. You only built 5,000. And here you could have sold 4,500 cars. You only built 3,800. So your demand is good, which means the way you're building your cars, your advertising is effective. You've just been under forecasting what you're building. And that means these potential sales went to somebody else. So here you say the year over year sales forecast was 3,800 for sedan with a 30% growth. It should be around 5K, but instead it was 6K. So sedan for year 4 says 5,400, 5,700 should have been the year 4 for sedan. And the 30%, yeah. So the average would have been 5,700, and then you forecasted only 5,000, but instead it was 6,000. Yeah, the demand was 6,000. You got a big bump because of your advertising, and the way you built your car was above average. So next year, your sales, your forecast, I'd say your forecast should be definitely higher than the blue bar here. If you do everything similar, you should go off of this blue bar to forecast your sales, not the yellow. Yeah, so for Jing, your sales went up a lot because you made above average cars and advertised heavily. So your sales forecasts were better than average. Keep in mind that this chart here is just average. So if you do better than average, so average would have been 5,700 and you went to 6,000. So you really just did a little bit better than average. Well, actually, no, 500 cars better than average. And that's how some teams are really getting high sales. All right. Benny Auto Group. Hold on a second. Okay, so should I use 6,000 to make next year's predictions? I would start with, I guess I would start with the chart here. So the chart is saying 74. I would make this your starting point for your forecast, not 6K. So the 74 is your starting point. So if you feel that your cars are better than average, forecast higher than this number, maybe 7,600. If you feel your car isn't as good or isn't better than the average car, you should maybe go lower, like 7,000. So I'd always refer back to this sales chart in the student user guide. All right, so so Joseph has a question about the Benny Auto Group. And this is, so your sales went up, and sales should be going up around 30% for all teams because of that's what the industry is doing. And then hopefully you can get the profits up in a similar percentage. And you've been doing that. Stock price is good and earnings per share is good, but your points aren't bad. It's just that you started off with, you've been going around those 400 points per round, which is basically what you're trying to get. So again, here with if you look at year 4 here in this, you should have been 4,000, 57, 3,000, 4,000. And you did, this is the other team. Okay, so you did well in sedan. So you met all your demands. And so for all your cars, you pretty much, except for luxury, you met all of your demand. But what I suspect is you had leftover inventory. So if I go to production, yeah, you had this leftover inventory. That actually wasn't too bad. Not a lot left over. So pretty efficient. So if we look at your overview points, so 3, 5. Yeah, so your only real problem is profit margins. It's not a problem. It's just that you did well in gross, but your operational and net went down probably because of the heavy advertising. So I would say your goal for the next round is get this above 60% and get these above hopefully 40 and 30% if you can. And that should have a much better effect on your score. So just try to get those profit margins up as high as possible. So you asked, I just wanted to get your opinion on our sales and profits, but how can we get our points back up? So if you want your points back up, get all 3 of your profit margins higher. You had 2 of them that went negative. So the other one only went up 4%. So for this round, try to get your gross as high as possible, 60, 65%, and that should flow into your operational net, and then your points will be back up. So it's really just your profit margins are still sort of in the bottom half of the class. You want them above, try to get them above 60% or 65%. All right. But this is advice that all the teams can use. This is nothing that is unique to these 2 teams. I think a lot of the teams are having this issue with sales and profits. So, okay, so this team, again, this team, the points are good. You're over 400, but again, your profit margins, they're flat to backwards on operational and net. 5%, they're only 3 points higher from 57 to 60. So again, this team, you need to get your profit margins higher, which means the easiest way to do that is increase your operational cost reductions. So I'd probably try to max them all out this round, put them all to 10. And then you'll be able to, when you build your cars, you'll be able to build them with higher profit margins. So it doesn't necessarily hurt see, already I popped it up from 59 to 66. So if you could go up 5 or 6 percentage points in every car, you should be okay. All right. Oh. Somebody just got admitted late here. Okay, so I'm going to release end the poll. So in the poll, the winning 48% of the class says that they don't like the Zoom conference calls. They rather just have posted videos. 30% feel their professors are confused, and 19% are not impressed with the Zoom tool. And 15% are not sure what's going on. Okay. So much for the poll, the test of the poll. Okay, so I'm about ready to end the class unless anybody else has any other questions about Blackboard, my finance lab, or the simulation. I'll give you a few minutes if you want to ask a question. Otherwise, you can just leave the class if you want to, because I'm going to ending it. Now, this is also being recorded, so I will post this under announcements. Under announcements, the link to the video, if you want, if anybody missed it, they can watch it, or came in late. Yeah, David just wrote stocks, and stocks are just unpredictable at this point because we don't know what's going to happen in the economy or with the medical situation. So I really have no idea where stocks are going in the short term, but I can tell you in the long term, stocks will definitely be higher. I have no idea if classes will be online in the fall. Every semester I do teach at least one class online anyway. The classes for the summer will definitely be online, but most of the business courses are online for the summer anyway. But the fall is anyone's guess. I guess they're waiting to see how the situation plays out, and then they probably won't be ready to make any announcements on that probably for a month or two at least. I expect a recession worse than 2008, but I expect a recovery much quicker. So even though if you measure the recession by decline in gross domestic product, it'll probably be much greater than 2008, but the recovery will be much quicker. So because it's not stemming from a financial crisis, the return to economic activity should be pretty swift, because most of what's being, say, delayed, purchases of new cars, purchases of washing machines, purchases of clothes, and haircuts and nail salons, a lot of these things will be caught up with once all the stores do open again. There'll be a a huge increase in demand, a lot of these common items, so the economy should spring back. The only thing that will be lost will be the people will not be able to make up many of the lost meals at restaurants, because you're just not going to go to the restaurants more to make up for the meals you missed. If anything, I think probably the restaurant industry will have the hardest time rebounding because they're just not going to be able to make up the lost demand. And same thing with the airlines. People aren't going to travel extra once the airlines are open back up again to full schedules. So those couple industries will just take a hit. But in the long term, everything will be fine. And in long term, 3, 5, 10-year horizon, stocks are always going to be higher. So I don't ever give suggestions to students about when to buy stocks. The only thing I say is that if you buy stocks now, in 10 years, we have 80% chance prices will be higher. So I wouldn't care to even suggest when to buy stocks, because stock market went up today. It could be down tomorrow. It could be down a lot next week. Things are just too unpredictable. Oh, I'm not going to tell you what stocks I'm looking at. That's a recipe for disaster. Because then if you buy something on my recommendation and it goes down, then you blame me for it later and maybe try and sue me. So it's a no-win situation for me. I don't get anything if I give you the right stocks to buy, but if you get the wrong stocks to buy, you can hate me for the rest of your life. So there's no sense in me ever giving you recommendations of what to buy. What I do instead is give you the tools from this class so you can develop your own recommendations by doing financial analysis on companies, by understanding the financial ratios, by understanding how, through the Zoom simulation, how a company works, how they make money, what pushes the stock price up higher, which is more profits, more sales. So I give you the tools to do it yourself rather than just telling you. And even the best stock analysts are wrong. They're usually wrong 5 out of 5 times. 50% of the time, they're wrong on what they're recommending anyway. So it's always better to develop your own analysis. Some days most of the time I do like teaching better, but I do also enjoy working in industry. It's a separate type of work altogether. Teaching is one set of skills and it's more people oriented, while I do still do like the analysis side where it's just me and the computer and spreadsheets and analyzing. Both have an appeal, but if I had to pick one over the other, it'd be teaching. Oh, that's easy. I'd like to work for the entertainment industry. I'd be interested in being a financial analyst, budget analyst for, say, like movie productions. At this point, I'm not going to review at any more teams because feel like I'm just going to be saying the same thing, which is for all teams, you need to increase your profit margins. So by making operational investments, by forecasting accurately, so you want to maintain your high level of sales, but at the same time, you want to do everything by increasing sales prices, reducing costs to increase those profit margins. So if you can increase them by 5 percentage points each round, you should be doing very well. Okay, so I am going to be closing out this session in 4 minutes at 4:55. I'm going to end this session. So feel free if you want to drop out of the chat, feel free. If you want to ask any last minute questions, that's fine. But I'm going to end this in about 3 minutes, and then I'll post the video to this on Blackboard for if anybody joined late or missed any part of this. I mean, it wasn't exactly thrilling, but I'll use this video conference to go over the next 2 rounds, rounds 5 and 6, and wrap up the simulation. Yeah, Joe asked, is there any extra credits? So I get a lot of questions for students. Are there extra credits? Can I do extra work? And the answer is no, because I have, it's just my policy not to get involved in extra credit, especially when I have a 200 student class. It's just, the extra credit is just never enough. And by and large, a majority of the students in the class, or 50% of the students in the class, are easily on track for an A in the class as long as they keep up with their work. And you also have, if you're really unhappy with your grade, I believe you could look up, the school is more generous this semester with pass-fail options. But yeah, I don't anticipate, which I never do, is providing extra credit for the courses, because as they are, they're pretty, students do well enough on them already. There's not like, if 50% of the class was failing, then I might consider something like that, but we're far from that point. I talked about the market a little bit a few minutes ago. I really have nothing to say about the stock market other than it's completely unpredictable. We're in uncharted territories right now, and there's no real insights that I can give you, because I really don't know what's happening. You know, it's just all over the map, and I really wouldn't want to give anybody investment advice as to what they should do moving forward based on the extreme unpredictability of what's happening in the world and the extreme volatility of the market. The only advice I would ever give about the markets is invest for the long term. 10 years or longer horizons usually do very well in the stock market. But there's nothing much I can say about the market that would be of any use to you at this point, because it would all be pure speculation on my part. However, if in the future you take an investment course with me, during an investment course, I will probably analyze the market, but I always do that in the past circumstances, not the present or future circumstances. So as far as analysis, I always look and explain what has happened, but not what's going to happen in the future. Because that's another recipe for disaster. Making predictions and then 9 times out of 10, they won't come true. Although, if you go to my YouTube channel, I do have a video posted that talks about the market, and where in the video I had in 2017, I had predicted a market crash in 2020. So you can go on to the YouTube channel, and I think the first video on when you enter the YouTube channel talks about that. Okay, it's 4:55. I'll see you next Monday. I'll do another wrap up of the simulation on Monday. So best of luck in the simulation. I hope you do well this next round, and I will be seeing you soon. Take care, everyone.